Namaste, good morning. Welcome to this session where our intention is to understand and complete TDS, TCS, and advanced tax, an area where there is sure short marks. Okay, an area where 8 marks will be 6 to 8 marks will be tested. Okay, so let's get on to this without wasting much time. Okay, we all know that the payer, okay, be it a resident or a non-resident having a PE, is liable to deduct tax at source and remit it to the government. Okay, and many a times he files electronic returns which directly reflect to the receiver as tax credit. Okay, these electronic returns are filed quarterly. Of course, some of the individual payments, some of the non-business payments does not warrant returns. For example, if I sell a immovable property, section 194 IA is applicable for me, but however I need not deduct tax at source, like that. Okay, where the recipient does not furnish PAN, where the recipient does not, because that is the only way I can give credit. Okay, then the quantum of deduction might become 20%. Okay, in few sections it is not going to be 20%. Let's see. Okay, and except for 192 payment of salaries, 194E, or in fact payment to non-resident, all other sections only speaks about S rate. You need not add surcharge and HEC. Repeating, for salaries, surcharge and HEC are applicable, whereas for all other payments except for non-residents. Again, for non-residents, surcharge and HEC are applicable. Others, it is not applicable. No tax needs to be deducted if the payment is for government, if the payment is for banks. Tax is not liable to be deducted. Okay. The provision starts from section 190. Okay. Income of the previous year is taxable. Okay. However, after providing for the section 191, where tax is not deducted at source, then assessee is liable to directly pay. Okay, just because tax is not deducted at source, it doesn't exclude me from paying my tax. TDS is for the payer, but that doesn't exclude that doesn't make the receiver say that I am not liable to pay tax. Okay, where the person who is liable to deduct tax fails to deduct tax, then the receiver, that is the assessee, shall pay directly, okay, the taxes. Okay, so do not worry that the payer, and with regard to the second part of that sweat equity, please wait. Let us go section wise from here. Okay, section wise, and understand the TDS provisions theoretically. TDS for salaries. Section 192, TDS on salaries is for all assessees. That is, whoever is the payer, this is applicable. I am repeating, whoever is the payer, this provision is applicable. What do I mean by whoever is the payer. Normally, when we go to section 194, we are going to understand individuals and HUF whose turnover has not exceeded 1 crore or gross receipts has not exceeded 50 lakhs in the preceding year is not liable to deduct tax at source during the current year. That benefit, that deduction, that provision is not there. Okay. Even for them it is going to be applicable. Applicable. Government paying salaries. Local authorities paying salaries. Okay. For all people, this is up. For all employers, you can take it as for all employers, this is applicable. Okay. Right. And tax is liable to be deducted if the taxable income exceeds basic exemption limit. When I say taxable income, employer can provide house property loss if the employee submits proof. Employer can provide all deductions if the employee submits proof. Employer can provide all exemptions if the employee submits proof. Okay. Employee submits proof, I can take anything. Employee shall furnish other incomes earned. In case employee provides loss from other heads, only house property can be considered. Okay, you can obviously against salaries, only house property. Business loss cannot be set off against salary. STCL, LTCL cannot be. So only house property. Where employee works with two employers during the previous year, employee might choose. He has to provide one employee's detail to another employer. He can choose. Okay. And the employer is liable to obtain all proofs, need to verify the authenticity in case of HRA exemption. You should get the name, address and PAN of the landlord if the rent exceeds 1 lakh. Okay. Average rate of deduction, average rate. Okay, what is meant by average rate? What is the total tax divided by total months of employment? If it is full year, 12 months. If he joins on 1st of September, 7 months. 1st of December, 4 months, like that. Okay, so TDS on salaries. Okay, these are all the provision. This apart, you have to understand one more thing which I told you yesterday. If suppose employee says he is opting for 115 BAC. If suppose employee says he is opting for 115 BAC, then employer is liable to deduct as per 115 BAC. A declaration is given to the employee on the first day of the year by the employer to understand which scheme he is going to opt for. If he says that he is going to opt for 115 BAC, then it becomes the duty of the employer to deduct so. So do not provide HRA exemption, do not provide the various benefits, etc. available, right? So that is what is this section salaries is all about. Withdrawal from PF 192A, where I withdraw from PF. Now people, you have to understand, my dear friends, that when will withdrawal be taxable? First, let us understand that so that we are clear about the other part. When will withdrawal of PF be taxable? If you withdraw from RPF without completing 5 years of continuous employment. I never even say that it is with the same employer. I'm just saying an employee should have continuously been services for 5 years. Then whatever is withdrawn is not taxable. It's not taxable. So when it is not taxable, no TDS. When whatever is withdrawn is not taxable, no TDS. On the contrary, when whatever is withdrawn is taxable. When whatever is withdrawn is taxable, then TDS provisions apply. Then TDS provisions apply. Okay, taxable if the assessee withdraws without completing 5 years of continuous service. Okay, taxable if the assessee withdraws without completing 5 years of continuous service. Threshold limit 50,000, rate is 10%. As I told you, there are some exceptions. Okay, PAN not provided, it is 30%. Normally PAN not provided 20%, here 30%. Normally PAN not provided 20%, then here it is 30%. Okay, 192. 192 has two provisions. One is TDS on salaries, second is TDS on withdrawal of PF. Now I move on to 194. One thing I want to be clear about 194 is, okay, the majority of the provisions of 194. Okay, right? Okay, I'm not saying everything. Majority of the provisions are not applicable for individuals and HUF whose gross turnover does not exceed rupees 1 crore slash gross receipts does not exceed rupees 50 lakhs, okay, in the immediately preceding year. In the immediately preceding year. Okay. So for the financial year 2021, should tax be deducted at source? If this is the question, for the financial year 2021, should tax be deducted at source for the individual and HUF? Depends upon, okay, gross turnover or gross receipts of 1920. Okay, if you remember our PGBP chapter, we did a question, UN, whose total income is whose gross receipts is 99 lakhs for the financial year 1920. So we gave commission, etc. But salary is applicable. This is only for 194, not that too, not all sections of 194, major sections. So it all depends upon what is the turnover in 1920. It is not on 2021. It depends on what is the turnover in 1920. And if that has exceeded, then irrespective of your turnover in 2021, deduct tax. If that has not exceeded, even if your turnover in the month of April 20 itself has exceeded 1 crore, still tax is not liable to be deducted. It depends upon the gross turnover or gross receipts of 1920. Having this in mind, we progress. TDS on dividend, we all know this is the first year. This is the first year after a long time we are taxing it. Okay, because 115O is withdrawn. Applicable to Indian companies distributing dividend to resident shareholders. Tax is on dividend as well as deemed dividend. Tax is on dividend, and it not only covers normal dividend, it covers deemed dividend also. Tax in any other mode other than cash, no deduction. Tax in any other mode other than cash, no deduction. Let me take this as an opportunity to explain something about a recent case law. Will bonus share amount to deemed dividend? Will bonus shares amount to deemed dividend? The answer is no. The answer is no. Okay, bonus shares will not be treated as deemed dividend. Okay, because it is not loan or advance given, etc. So it will not qualify. So tax. So here they mean if dividend is given in the form of bonus shares, no deduction. Threshold limit 5,000. Okay, and rate is 10%. And dividend paid in cash fully taxable. It's not possible, but still. 194A, interest other than interest on securities. You will wonder 193, that is interest on securities, have the same provision. Not a very important, that small government securities, etc. Not an important section, not seen questions. That's why I really omitted it. When the same provisions only twice repeated, why to waste time? Applicable for all assessees except individuals and HUF whose gross turnover does not exceed 1 crore or gross receipts does not exceed 50 lakhs in the immediate preceding year. I have written that. Tax needs to be deducted either on payment or on credit, whichever is earlier. Okay, deemed credit also envisaged. Banking companies crediting on daily basis through CBS not covered. What happens is there is something known as core banking solution for generating everyday balance sheet. Banking company keep their crediting it. That is not counted. That is in fact credited to a suspense account. Whenever it is credited to the party's account, whenever it is credited to the depositor only, it is counted. Otherwise, this is not counted. All interest except savings bank interest. All types of interest except savings bank interest and interest on capital are covered. I am clear. Savings bank interest, no TDS. Interest on capital, no TDS. However, interest on capital paid to a foreign partner, it is covered in section 195 rates in force. Okay, threshold limit. 40,000 in case of banking companies, post office and cooperative banks. The same is 50,000 for senior citizen. 5,000 in for other interest. I want the class to understand that if a company pays interest on debentures, still the limit is 5,000 only. A company paying interest on debentures or bonds, the limit is only 5,000. A private limited company paying, a private company or private financial institutions paying interest, the limit is only 5,000. Only for banking companies, including cooperative banks and post office, the limit is 40 or 50,000 as the case may be. 50,000 in case of interest on compensation awarded under motor claims. Okay, interest on delayed payment of compensation, not our immovable property, under motor vehicles accident tribunal. Okay, in that case also 50,000. And when I say that the limit is 40,000 or 50,000 for bank, it is per bank on and not per branch of the bank. It is per bank and not per branch of the bank. If there is a bank, City Union Bank, okay, it can be in Chennai, Mumbai, Bangalore, anywhere the assessee would have kept deposited. Everything is pan linked. So if the total interest payable to an assessee exceeds 40 or 50,000, total interest of all branch of a particular bank. Okay, that will only be taken. Rate of deduction 10%. We are theoretically studying once. Later, when we practically work also, we will recollect. Winnings, always 30%. Threshold limit is 10,000. Remember, winnings in kind will also qualify. Winnings in kind, you win a Maruti car. You win a Maruti car. Fair market value will be taken, and only if you pay the tax, I will give the car. Only if you pay the tax, I will give the car to you. Okay? All types of winnings are covered, even winnings in kind. Remember, in the case of horse race, even bookmaker or the person who gives the license are liable to deduct taxes. One of the major sections, 194C, payment to contracts and subcontracts. What types of works are included? Advertising, broadcasting and telecasting, carriage of goods or passengers by any mode other than railways. So railways is a government organization, you need not deduct tax. Catering, manufacture on the basis of supply of goods. Manufacture on the basis of supply of goods. Okay, right here I want you to understand this section 194C. Okay, let us for a minute take an example that okay, our friend Jay is a job worker. Okay, okay. Bharatwaj Institute, okay, requires, okay, right, t-shirts with printing of their logo. Okay, with printing of their logo. BI purchases t-shirts and provides to Jake prints and delivers the t-shirt. Okay, what he did is purely job work. What he did is purely job work. Okay, TDS is applicable. TDS is applicable. What our friend did is only job work and TDS is applicable. On the other hand, BI places orders, okay, purchases t-shirts, prints and supplies. What he did is pure sales, no TDS under 194C. I want you to understand, how do I determine whether it is job work or not? I determine, the law says it depends upon who supplies the raw material. It depends on who supplies the raw material. If raw material is supplied by the customer, what the other person does is merely job work. If raw material is supplied by the customer, what you do is just job work. If raw material is purchased by the job worker, he processes and gives me, even though it is customized, it is my t-shirt, it has my logo, he cannot give it to anybody else. Even though it is customized, it will be considered as sales and not job work, not contract. Okay, the difference here is who supplies job work, who supplies raw material. Okay, raw material supplied by the customer who places the order, job work. Raw material is, the customer just places the order. It can be specialized good, it can be custom made goods, but still I purchase the raw material, test the process and give it. It is only sales and not job work, no tedious. Then people started escaping through the route of raw material is supplied by the subsidiary company. I test the process and give it to my customer, which is the holding company. No TDS literally, because raw material is not supplied by the customer. Customer is holding company. One who supplies is subsidiary company. To close that channel also, the amendment was made. Manufacturing or supplying a product according to the requirement or specification of a customer by using materials purchased from customer or its associates. Till the financial year 1920 or its associate is not there. From this year, they have added the terminology or its associates. Okay, right? Being person related to the customer as defined under 48(2). So that is also job work. Advertising is job work, broadcasting is job work, carriage of goods. Okay. In this also, one more point to understand for carriage of goods. If the resident transport operator gives a declaration and a declaration that he don't own more than 10 vehicles and his PAN, then you need not deduct taxes. So, okay, carriage of goods, catering services, manufacture or supplying of goods according to the requirement of the customer by using material supplied. The raw material is supplied either by the customer or his relative. In case of goods transport operator, TDS will not be applicable if he provides declaration that he does not own 10 vehicles. Threshold limit, single payment 30,000, aggregate payment 1 lakh. TDS, receiver being individual or HU of 1%, in any other case 2%. Okay. Next comes all types of commission. All types of commission. Three sections are speaking about commission on TDS. One is insurance commission, okay, for agents. Another is commission on lottery tickets. Both are simple provisions, straightforward. The third is all types of brokerage and commission, 194H. For all these things, the threshold limit is 15,000 and the rate of TDS is 5%. Threshold limit is 15,000 and rate of TDS is 5%. Let us go to the case laws later, but this is the base law. Okay. 194 DA, maturity process of life insurance policy. Maturity process of life insurance policy. Okay. Right, friends? Section 194 DA. This is for life insurance. Okay. Okay. Maturity process of life insurance policy. Actually, it is a combination of three sections. Okay. Section 10, subsection 10D, which says, okay, maturity proceeds are exempt from tax. Which says maturity proceeds are exempt from tax. If it is exempt from tax, why do I need TDS? Why should I deduct tax at source? If maturity proceeds are exempt from tax, why should I deduct tax at source? However, or actually, provided, okay, there is a condition. Premium does not exceed 20% of policy value if the policy is taken, okay, if the policy is taken on or before 31/3/2012, okay, premium does not exceed 10% of policy value if the policy is taken on or after 1/4/2012. So, this is the same limit under which you can claim 80C also. That's why I said three sections. 80C also says life insurance premium is allowed as deduction under section 80C of chapter 6A, provided the premium does not exceed 20% or 10% as the case may be. However, where it exceeds up to 20% or 10%, it is allowed. Let's keep that 1 minute away and look at it. Maturity process are exempt if the premium exceeds 20% or 10%. 20% up to financial year 11-12 to 31/3/2012. For the last 10 years, if the policy is taken, it is only 10%. Where it exceeds, it becomes taxable. Where it becomes taxable, 194 DA is applicable. Shall I repeat? Where it exceeds, it becomes taxable. Where it becomes taxable, 194 DA is applicable. 194 DA, maturity proceeds of life insurance policy. Normally tax deductible if such maturity is not exempt. When it will be exempt, maturity possible is liable taxable if the premium exceeds 20% and 10% as the case may be. Threshold limit, maturity proceeds exceeding 1 crore, 1 lakh. Threshold limit, maturity proceeds exceeding 1 lakh. Rate of deduction 5% of income. What is income? Income is the difference between maturity proceeds and premium paid. That is only the bonus. I want the class to understand two things. Threshold limit is not on the basis of income. Threshold limit calculation is based upon maturity value. Okay, threshold limit, maturity value. Rate of deduction is only on the basis of income. (194)E, non-resident sports persons and entertainers. Non-resident sports person, we already know section 115B is B is taxing them. Okay, the payment covered in this provision are participation, advertisement, contribution of articles. Payment covered are participation, advertisement and contribution of articles payable to a non-resident who is not a citizen or sports association. Rate of deduction 20.8%. Rate of deduction 20.8%. Okay. Why here HEC is ordered? Because the recipient is a non-resident. NSS maturity 2500, 10%. I have not seen a person there. The next major thing is 194I rent. The next major provision is 194I TDS on rent. Okay. Tax needs to be deducted either on payment or credit, whichever is earlier. Rent means any payment by whatever name called, on lease, sublease, tenancy or any other arrangements for use of immovable property, plant, equipment, furniture. Threshold limit 240. Threshold limit is per owner. If it is joint owners equally sharing, threshold limit will become 4,80,000. Threshold limit is per owner. Threshold limit is per owner. Rate of deduction 2% for plant, machinery and furniture. 10% for rate of machinery 2% for plant, machinery. It's wrong. Equipment. Here I made a mistake. It is on equipment. Okay. 2% on plant, machinery and equipment. 10% on immovable property and furniture. (194IA) transfer of immovable property other than agricultural land. Transfer of immovable property other than agricultural land. This is for domestic assessees, not just for business assessees. It is also for domestic assessees. Applicable for assessees who transfers immovable property and the consideration for such transfer is 50 lakhs or more. The consideration for such transfer is 50 lakhs or more. Okay. Consideration includes total sum. Consideration includes total sum paid in relation to transfer. Couple of years back, there was a case law where transfer of house property or transfer of immovable property 49 lakhs. Payment for other amenities, payment for other facilities 5 lakhs. Total consideration 54 lakhs. 49 lakhs for immovable property, 5 lakhs for others. So tax was not deducted at source. It is said it is wrong. Consideration includes total payment. You might split it up by various means, but consideration includes total payment. Similarly, a builder who is transferring might collect it on different names. Consideration includes total payment, so the total should be covered. Okay, TAN is not mandatory and the rate of deduction is just 1%. Rate of deduction is just 1%. This is again for a domestic assessee. I would call non-business assessees as well. Payment of rent by certain individuals and HUF. Payment of rent by certain individuals and HUF. Section 194 IB. Okay. Applicability, I want you to understand. Applicable to assessees who are not covered under 194 IB. Very simple. This is applicable to assessees who are not covered under 194 IB. So can I call it as non-business assessee? Yes, I can call it. All non-business assessees, salaried clause, other sources clause, all non-business assessees are covered by this. That's all, Asa. No, one particular class of business assessees are also covered. All non-business assessees are covered in this 194 IB and business assessees, business individuals or HUF whose turnover / gross receipts has not exceeded rupees 1 crore or 50 lakhs in 1920. All non-business assessees are covered under 194 IB. No doubt about it. and also individuals and HUF whose turnover or gross receipt has not exceeded, because for them also 194I is not applicable, whereas 194IB will be applicable, whereas 194IB will be applicable. Okay, applicable for individuals and HUF not carrying on any business or profession. Okay, not carrying on any business or profession, or carrying on business but their gross turnover of gross receipt has not exceeded 1 crore or 50 lakhs as the case may be. Tax is liable to be deducted only in the last month of tenancy or last month of the year. Threshold limit 50,000 per month. Here alone it is per month. Rate of deduction 5%. Read through. One second. (194) IC specified agreement. You remember, where I transfer my land and building, joint development agreement, and get back something. Okay, right? In capital gains chapter, we saw specified agreement will be regarded as transfer. It will be taxable in the year in which the new property gets completed and registered in my name. Fair market value of the land, building, and any monetary consideration will be taken as full value of consideration. Monetary consideration, for that only TDS applicable. In a specified agreement means a registered agreement in which a person owning land or building agrees to allow another person to develop on such land or building. The consideration is share of land or building plus any cash consideration. Deduction should be made at the time of credit of such sum to the account of the payee or at the time of payment thereof in cash or check. Only monetary payment is covered. Rate of deduction 10%. Only monetary payment is covered, not the other types of payment, and rate of deduction is 10%. (194J), the most popular fees for professional services. Many things in this table are amendments. What are all 2%? Call center, we already saw this in one of the questions, 2%. Technical services is now restricted to 2%. Exclusive technical services, which does not involve any professional, is 2%. Distribution of films, we saw that the royalty definition now has been amended to include sale, distribution and exhibition of films. Sale, distribution and exhibition of films, that is also 2%. All other things 10%. Threshold limit 30,000. $194K. This is also an amendment. This is for dividend from mutual funds. 194 is dividend from companies. Same provision. I should have put it in blue. It is also an amendment. Dividend of income from mutual funds, specified company or entities, 5,000. Only dividend and not capital gain. Rate of tax 10%. $194 payment of compensation for compulsory acquisition of property. Payment of compensation for compulsory acquisition of property, 250 is the threshold limit, rate is 10%. 2,50,000 threshold limit, rate is 10%. All this LB, LC, we have already covered. Rupee denominated bond, business trust distributing interest to non-residents, 4%, 10%. We have already covered. Look for non-resident taxation where there is a table available to you. $194M. Again, I am going to tell you whom $194M is applicable. Whom $194M is applicable. Okay. Applicable for assessees who are not covered under 194C, 194J and 194H. Applicable for assessees who are not covered under 194C, contract payment, 194J, payment to professionals, okay, and 194H, okay, commission. Applicable to them who are not covered. Who will not be covered? Non-business assessees and individuals and HUF whose turnover or gross receipt does not exceed. Non-business assessees. Here I am adding one more thing. Business assessees for their domestic payments. Business assessees, I am a business assessee. I am covered under 194C, but I am paying some domestic purposes. Normally 194C is not applicable. I am a business assessee. I am carrying on my profession. If I make a payment in relation to my profession, 194C will come. I am building my own office, 194C will come. I am constructing my residence, 194C will not come. I am building my own office, 194C will come. I am constructing my residence. 194C will not come, 194M will come. Non-business assessees. I am a salaried employee constructing house. Business assessees making domestic payment, or business assessees making business payment, but he is an individual or HUF whose gross turnover has not exceeded 1 crore or gross receipt has not exceeded 50 lakhs. Non-business assessees, business assessees making domestic payment, and individuals or HUF whose gross turnover. Okay, for them it is applicable. Applicable for individuals and HUF not carrying on any business or carrying on business but their gross turnover does not exceed 1 crore, etc. Three types of payments are covered: works contract, fees for professional service, commission. Tax to be deducted only at the time of payment. 50 lakhs is the threshold limit, 5% is the rate. Cashless economy, one more provision for that: don't withdraw cash from bank. If you withdraw more than 1 crore, 2% of that excess is taxable. 2% of that excess, okay, withdrawals exceeding 1 crore on that 2%. Provision not applicable for government, another banking company, ATM operators, teller machines operators, etc. One amendment which went crucial. If the assessee has not filed his returns, if the assessee has not filed his returns for 3 consecutive years, all 3 years, if the assessee has not filed his returns for 3 consecutive years, the threshold limit is not going to be 1 crore, it is going to be 20 lakhs. If the assessee, where the assessee has not furnished a return of income for all 3 years, remember, for all 3 years for which time limit has expired, the threshold limit is just 20 lakhs, is reduced to rupees 20 lakhs. Where the assessee has not furnished a return of income for all 3 years, for which the time limit of filing is already expired, then the threshold limit is just 20 lakhs. And the rates are 20 lakhs to 1 crore, 2%. More than 1 crore, 5%. 20 lakhs exceeds 20 lakhs, but less than 1 crore, 2%. More than 1 crore, 5%. Normally, whatever is the tax deducted is an income for the receiver. in this case, it is not an income. Okay, I need to pay professional charges of 1 lakh to you. I deduct 10,000 and pay you only 90,000, but your income is 1 lakh. The tax deducted by me is an income for you. But here it is not on expenses, it is on cash withdrawal. So it will not be treated as income. You can take credit of it, it will not be treated as income. The most important questionable area section now is 194 IO, the newly incorporated from 1st October, okay, which is payment to e-commerce operator, payment by e-commerce operator to a participant, payment by Amazon, payment by Flipkart, payment by Rediff, payment by Yahoo to a participant. To a participant, the one who displays goods and sells. Provision applicable for a e-commerce operator facilitating digital or electronic facility. It is both for sale of goods and services. First time we see even sale of goods getting tedious. Rate of deduction 1% of the gross amount paid or payable. Okay, where PAN is not provided, rate is 5%. Where PAN is not provided, rate is 5%. Deduction at the time of credit or payment, whichever is earlier. Gross amount will include all payments made to the participant. Even direct sale facilitated by the operator shall be included. Even direct sale, okay, okay, a portal is there where I am selling directly through that portal. The money directly gets credited in my account. Normally it goes to the portal and the portal pays me. Here is a case where the money gets directly credited in my account. That will also be counted. The term gross amount include all payment made to the participant. Even direct sales will be included. One exception applicable only for individuals and HUF. Tax shall not be deducted if the participant is an individual or HUF and the aggregate amount of payment does not exceed 5 lakhs. The participant should either provide PAN or Aadhaar. For though the provision is applicable from 1st October 2020, though the section is applicable from 1st October 2020, threshold will be computed for the whole year. Threshold. However, the threshold will be from the beginning of April and not from the date of this provision. On the question whether the payment gate operator, Google Pay, Razor Pay, okay, whether the payment gate operator has to deduct tax in case of a transaction taken through digital platform, it has been clarified. Where the payment gate provider gets an undertaking from the operator, the tax has been deducted at source, they need not again. Okay, so I am also having a direct payment. Okay, just now we saw it will include even direct sale. I sell through this portal. I also directly sell through payment gateway. So through the payment gateway, it gets credited to my account. Now, is the payment gateway liable to deduct tax at source? It will contact the website, it will contact the web portal, e-commerce, saying, are you deducting on the total amount? Then I need not deduct. If they are not deducting on the total amount, payment gateway also needs to be on the question whether the payment gateway or Razorpay is liable to deduct tax in the case of transaction through digital platform, where the payment gateway provider gets an undertaking from Amazon, the tax is deducted by Amazon, then Razorpay did not deduct tax. This is for insurance agents or insurance aggregator. What is it? Let me clarify before going into it. We have now lot of portal which is taking care of premium. Okay, I mean which through which I can take a policy. Policybazaar.com. First year I am taking a policy through policybazaar.com, e-commerce provider, and it will deduct tax onto the e-commerce participant even if it is an insurance company. From next year onwards, I keep paying the premium. Again, every year I should cover up. Suppose a portal acts as an insurance agent. Collect premium from various persons and remit it to an insurance company, then it will fall under provision of service and the insurance company becomes an e-commerce participant. Tax is applicable. If in the subsequent year, the policyholder directly pays the premium to the insurance company, the question is whether it will still be regarded as provision done by e-commerce operator. It has been clarified where the insurance agent or aggregator has no involvement in the transaction, he will not be liable to 194O. However, on the commission paid, TDS will be applicable, that is 194H. From the top, please read it once. All sections put together will take 10-15 minutes. Just a quick read through, please. These provisions have a base idea. When we work out the questions, we will again recollect the provisions. When we work out the questions, we will again recollect the provisions. But what is more important with regard to TDS as like our assessment is case laws. Case laws gets more importance in TDS also. Okay, so please be clear about the case laws. I think I pasted it after the question. So let me first complete the case laws and then take up the question. I am in page number 384. I am in page number 384. Tips received by a hotel company and distributed to the employees. My dear friends, in hotel industry, they put something known as service charge. Nothing but tips to the bearer and supervisors. Okay, they put something nowadays in the bill itself, top hotels, service charge. So they collect it from the customer and equitably distributed to various bearers. The question now is, since the payer is the employer, is it covered under salaries, especially profit in lieu of salary? The court has clarified no. It is as if the customer directly paid the bearer. I am just acting as a collecting agent. This will take the character of payment directly by the customer to the worker. The employer merely acts as a collection point, hence no TDS. Tax will not be applicable. TDS will not be applicable. Any payment to government, my dear friends, tax is not liable to be deducted at source. Sometimes payment is made to court because there is a dispute with regard to the asset. Payment is due to legal dispute. Interest on FD is made in the name of Registrar General of Court. Okay, should tax be deducted? The answer is no, because the bank will never know who is going to be the ultimate beneficiary. After the judgment is given, it will go to the ultimate beneficiary, but the bank will never know. It was held that the bank does not know the ultimate beneficiary, or in other words, ultimate beneficiary will be known only after the dispute is resolved. So the bank is not liable to deduct taxes. Payment to government, no tax deduction at source. What is government? Established by the law, under the law, held by the Supreme Court, that the key factor to determine is whether it is established by the law or under the law. If it is established under a law, then it gets the shape of establishing statute under insurance law. Okay, life insurance corporation is formed. Infosys Limited is established by the company law. If it is established by the law, then it is a different entity. In the case of Noida, New Okla Industrial Development Authority, it is established under the law, so no TDS. Of course, the interpretation in the colloquial sense, we interchange and use also. It is established under company law. It is established by company law. But generally on a broader scale, okay, SEBI, okay, company law, MCA are all under the law. By the law means it is a different entity. So interest has these two things. The first one is already questioned. The second one is not yet questioned. Please be clear. Winnings. Okay. Winnings. Okay. An interesting case. Winnings is in kind. Should I deduct tax at source? Yes. How? Whoever is the winner, from them get the proof of tax or ask them to pay the tax, etc. Suppose I have not done so. Am I an assessee in default? Am I an assessee in default? Now the law has a very different answer. It says you are supposed to do, but if you don't do it, you are not an assessee in default. Once more, I will tell you. Mr. X has won 1 lakh of cash winnings. I, the payer, has to deduct 30% and remit the balance 70,000 to him. If I don't do it, I am an assessee in default. No doubt about it. No doubt about it. Mr. X, a winner, wins a gold coin. I have nothing to deduct tax at source. I have nothing to deduct tax at source, but I have a liability. I have to give him the gold coin only after he pays the tax or gives me the tax money. But unfortunately, I did not collect it. Am I an assessee in default? The law has said no. Wherever payment has to be made, and I have not deducted tax at source, I am an assessee in default. In this case, there is no way I can deduct it. Of course, I should get the proof of payment, but in no way I can deduct it. Provision 194B makes it responsibility for the duty to deduct tax at source. Where the winnings is in kind, there is nothing to deduct at all. The responsibility is to ensure that the winner of the prize money pays the tax before releasing the winning. Where assessee fails to ensure the same, penalty gets attracted, but assessee will not be treated as assessee in default. Okay? Assessee, of course, I am going to have penalty, I am going to disallow. But is the assessee in default? No, my dear friends. When there is nothing to pay, there is nothing to pay. That is with regard to 194B, important case. 190, all commission related case laws. Enough times questioned. Okay. Ahmedabad stamp vendors. Okay. Should stamp, okay, I buy from the government stamp paper. I buy from the government stamp paper. They give the stamp paper at a lesser value. 100 rupees stamp paper, they give it for 98 rupees. I sell it for 1 or 2 rupees. So I earn a 4 rupee profit. 2 rupees from the government, 2 rupees from the buyer of the stamp paper, etc. Is the government liable to deduct tax at source? The answer is no, because the contract is principal to principal basis. In the case of stamp duty, okay, government is not liable to deduct tax because the contract is principal to principal basis. It is held discount on purchase of stamp paper is not in the nature of commission. Hence, 194H is not applicable. If you achieve target, I will give you extra 5% commission. If you, the agent, achieve target, I will give you extra 5% commission, liable to deduction at source. If you achieve target, Okay. I am supplying you goods for 190, you are selling it for 200. If you achieve target, I will supply the goods to you at 193 rupees. I mean, okay, 187 rupees. If you achieve target, instead of supplying goods at 190 rupees, I will supply you goods at 187 rupees. Incentive given in the form of stock. This will not be treated as commission. Why? It will be treated as if the agent purchased the goods for 187 rupees. Though there is an agreement that if you achieve target, I will give you commission in the form of stock incentive. I will give you commission in the form of trade discount. What is that commission? The purchase price stands reduces or my sale price stands reduces. This is not commission in a technical sense, so there is nothing. Relationship between the assessee and stockist is that of principal to principal. Further, incentive was offered to boost the sales. These incentives will not be considered as commission. Accordingly, the High Court affirmed TDS will not get attracted and disallowance provision will not apply. Stock incentive, no TDS. SIM card, prepaid SIM card. Remember, today everything is portal based. Previously, we used to go and buy SIM card, go and recharge prepaid, etc. Okay, so and that is the difference between the price at which it is recharged. For example, I recharge for 500 rupees. He will pay to Airtel only 475 rupees or 480 rupees. This 20 rupees is a discount liable to tax. Okay. Discount given on supply of SIM card and prepaid cards by a telecom company to its franchisee. The distributor were just a middleman in this transaction. The property remained with the assessee. Okay, the price at which these has to be sold is also determined by assessee. In the real sense, franchisee is a term but only an agent. Hence, the telecom company is liable to deduct tax at source. Further held that the ultimate service to the customer is also done only by the telecom company. So tax will be deducted. Taking that SIM, that Bharati Airtel, coming to the next case law is Qatar Airways. What is that case law? Sir, what Qatar Airways did is for various travel agents, they said that we will give you 5% commission on ticket sales. Taxable under 194H, no doubt about it. Taxable under 194H, no doubt. Apart from it, we will give you tickets which will have MRP. Let us take MRP is 15,000. You can sell the tickets at any price less than 15,000. If somebody is booking 3 months in advance, they get it for 10,000, 11,000. Somebody in the last minute, 15,000. They gave the tickets for 10,000 rupees or 9,000 rupees, asking them to sell it at any price which should not exceed MRP. This is also commission. But tax cannot be deducted at source by Qatar Airways because they will never know at what price the agent has sold. Of course, this is commission, but they will never know what price the agent has sold it. Okay. Additional special commission is the difference between minimum fixed price and MRP. In order to deduct tax, there should be a certainty of the payment of commission. In the given case, airline company would have no information about the rate at which tickets are ultimately sold. So it is impracticable. So there is no TDS. Doordarshan, Director Prachar Bharati. Okay, Doordarshan. What is this case? I will tell you the fact about Doordarshan paper and all. Suppose if you want to give an advertisement today in the newspaper, you go to an advertisement agent near your home, okay, and place the advertisement. He collects from you, let us take 50,000 for the advertisement. He remits to the television agency or the news channel 42,500. He collects 50,000 from you and he remits 42,500. 7,500 is treated as commission. Till this judgment came, Supreme Court judgment came, it was not treated as a commission because of a CBDT circular. CBDT circular says this is not commission, principal to principal transaction, as if I purchased it for the slot for 42,500, sold to my customer for 50,000. But this case law has overruled that circular, overruled a previous judgment. Now the Supreme Court has said, yes, it is commission. Remember this case law also. Held by Supreme Court, definition of commission or brokerage is inclusive and covers any payment received or receivable either directly or indirectly by a person acting on behalf of another person for services rendered. What is commission? Any payment received or receivable either directly or indirectly by a person who is acting on behalf of another person. The agreement itself uses the expression commission. The relationship is agency. Thus it is held that the amount retained or credited to the advertising agency is commission and TDS will get attracted. Now tax has to be deducted at source. No option. Tax has to be deducted at source. Okay. For commission, remember those things. Sorry, this is wrong inclusion. This is wrong inclusion. In the case law, they have removed this case law. Okay, this is the, as this chapter is finally prepared, I was running short of time to give it, so that's why the alignment is also not very clear. Okay, this please strike it off. Please strike it off. This is not at all. This case law has been removed. Okay, this case law Ajmer Vidyut Limited has been removed. This is a case law which has been tested enough number of times now. I don't predict it. Landing and parking charges paid by airline company to Airport Authority of India. Is it in the nature of rent? No. The Supreme Court observed that the charges paid includes landing, lighting, approach and aerodrome charges, aircrafting charges, hangar charges, passenger service charges, etc. Thus, when the airline pay for these charges, treating such charge as merely as a rent for use of land would be totally adopting a simplistic approach which is far from reality. Substance behind these are considering keeping in view the full and larger picture. Hence, it cannot be treated as rent. It is only 194C and not 194I. It is only 194C and not 194I, my dear friends. Similarly, Indus Towers, those who are putting this towers for mobile operators. Okay, okay. Is it rent? Is it rent? No, it is renting of equipment. It is not renting of land area. It is renting of that equipment. Okay, so 2% is the rate of taxation. The submission by the assessee that it is not renting is not clear. Similarly, the contention by the revenue that renting is a primary, renting is land is also not correct. The underlying object was usage of machinery or equipment, and it is incidental and necessary to house the equipment in the mobile tower. Hence, 194I letting out for plant, machinery and equipment will be applicable. 2% rate. It is neither 194C nor 194I part 1, that is renting out of land. Senior Manager, State Bank of India. This is the case law where if there are co-owners of a property, threshold is per owner. Threshold is per owner. When the shares of co-owner are definite and ascertainable, they cannot be treated as AOP. The income is to be assessed in the individual hands of the co-owner. Threshold has to be seen separately for each co-owner. All these dumper equipments, okay, assessee was engaged in business of transporting of building equipments, salt, backdrop iron. Assessee made payment for hiring of dumpers and deducted under 194C. High Court held the assessee as correct because assessing officer said you have rented an equipment. Assessee held the assessee as High Court held the assessee as correct and held assessee has given contract for transportation of goods and not for renting of machine, though the rates are same. Such payment not to be termed as rent of machinery. We saw 194C versus I. Then comes this Kotak Mahindra case, which is 194C versus 194J. What does Kotak Securities paid for? You can see in the television the stock prices going on. Okay, real-time update of stock prices. Okay, this is provided by the stock exchange. I pay and get that. Is it a technical or professional service or is it a contractual obligation? The court said this is not specifically given to you. If it is professional or technical nature, it is particular person specific. It is tailor-made for one person. Then only I will call it as professional or technical. It is generally available. Whoever pays can avail it. It is available. Whoever pays can avail it. That is not. Services provided by stock exchanges are available to all members. There is no exclusivity in the services rendered, and each and every member has to avail such services in the normal course of trading in security. Hence, the Supreme Court held that the services provided by Bombay Stock Exchange failed to satisfy the test of specialized or exclusive. Okay, these are not technical services but only facilities. Hence, 194J is not attracted. 194C. Friends, important case law. Why important? Because it is from the November 21. It is from the November 21. It gets so much of importance. Sure, question வரதுக்கு possibility இருக்கு. November 21 judicial pronouncement. Is the payment made to a non-resident by the end user or distributor of a computer software? Is the payment made to a non-resident by the end user? I buy Microsoft Word, I sell a Microsoft 365 package, etc., or by a distributor. Will 194J royalty be applicable? The apex court observed that following four category of cases in which distribution agreement and end user license agreement did not create any interest or right to distribute, which would amount to use of any commerce. What are all the four cases? No TDS. Four cases on which no TDS. Where computer software is purchased directly by the end user from a foreigner non-resident supplier, no TDS. No TDS. Where resident Indian company acting as distributor or reseller purchases computer software from foreign or non-resident suppliers or manufacturer, then resell. Where software is used as goods, no TDS. I am buying and selling. I am not using it as a platform. 3. Where the distributor happens to be a non-resident who, after purchasing software from another non-resident, resells the same to a resident Indian. I am not directly buying from the manufacturer or developer of the software. There is a middleman where the distributor happens to be a non-resident who has purchased it from another non-resident and given it to me. Where the computer software is affixed in the system itself and sold as one unit. In all the above cases, the apex court had held that the amount paid by the resident Indian end user or distributor to the non-resident as consideration for resale or use of the end user agreement or distribution is not royalty and hence no tax is liable to be paid. If the end user, if I buy Microsoft 365, no TDS if I have paid it to a non-resident. If I buy Microsoft 365 with the intention of reselling, no TDS. If Microsoft 365 is embedded in my system and I buy a system, no TDS. If I buy Microsoft 365 with the intention of using it as platform, TDS is applicable, but I am not buying directly from the developer. I am buying from another middleman. No TDS. Important case law, write all the four things, you will get the marks. Important case law, my dear friends. This is also November 21. November 21 judicial announcement had four cases. Pepsi Foods, Engineering Limited, Corporation Bank, and that bonus shares will not be treated as being dividend. Will Section 194H apply for payment made by assessee bank for services rendered by National Financial Switch? The High Court observed that the relationship between the bank and NFS is not on agency but of two independent parties on principal to principal basis. Therefore, 194H is not attracted. So remember this, and engineering analysis along with the recent amendments that will be more than sufficient. A quick answering of questions will enable us to complete the arena with a lot of confidence before going into TCS. Give me a 5-minute break. Let's do some practical questions on TDS, starting with, okay, I'll try to cover all the sections again so that we are clear. An employee joined on 10th April 2017 and resigned on 31st March 21. He withdrew 60,000, being the balance in EPF, analyzed in view of the TDS provision. He has not completed 5 years of continuous service. Okay, employee has not completed 5 years of continuous service. Here withdrawal becomes taxable, hence provisions of 192A is applicable. Okay, exceeds threshold of 50,000, TDS will be, okay, 10%. Exceed 10% of rupees 60,000. Okay, so TDS will be 60,000 into 10%. And not provided, this will become 30%. If PAN is not provided, this will become 30%. Okay, so when you write an answer, write the base provision and then come to the answer provision. Okay, write the base provision and then only come to answer. Neeraja wins a Maruti car in a contest conducted by Hindustan Lever. Analyze the TDS impact on the same and its consequence in case of a failure. Okay, question number 2. Okay, where winnings are in kind, the provider of the article should ensure that the assessee, that is the winner, has remitted the tax taking FMV as the, taking fair market value as the value of income. Okay, so where winnings are in kind, fair market value will be the article's fair market value, and I should obtain the proof that the winner has remitted the tax. Where there is default, then assessee is assessee here, then the payer, sorry, then the payer will be okay, will be held liable to pay penalty. However, in Hindustan Lever's case, it is held that he will not be considered as assessee in default. Okay, section 201. Okay, one benefit now I get is I will not be considered as assessee in default. Okay, so section 201. Trustworth LLP pays 75,000 interest to Indian branch of a foreign bank, 60,000 interest on capital. Both are not covered under TDS. Both are not covered under TDS. Why? Because payment to a bank, even though it is an Indian branch of a foreign bank also, payment to a bank, no TDS. Interest on capital, no TDS. When interest on capital will be liable to tax TDS when the receiver is a non-resident. When the partner is a non-resident, it will be liable and section 195 will apply. Section 195 will apply. Okay, for these things I would go by the solution. Interest payment to bank is not liable. The term bank will also include foreign bank, and section 194A is not applicable for interest on capital. Section 194A is not applicable for interest on capital. Section 195 will become applicable if the interest is paid to a foreign partner. If the interest is paid to a foreign partner. Does manufacture according to the specification provided by assessee constitute job work? No. When it will be considered as job work and 194C will be applicable? If the raw material is supplied by the customer or any person nominated by the customer, then it will come. Okay? If the job, okay, please understand, okay, answer depends upon who supplies the raw material. Answer depends upon who supplies the raw material. If raw material is supplied by customer or his relative, then job worker is just the processing and TDS will be applicable. If orders are placed, even if it is specialized, job worker procures the raw material, then it is only sale, no TDS under this section, under 194C. Sunil Pratap deposits 18,000 per month in the recurring deposit. Sunil Pratap deposits 18,000 per month in the recurring deposit, okay, with the bank at an interest rate of 6%. First remember, except the savings bank, all other things will fall under TDS provisions. Except savings bank, all other things. So we need to compute interest, and there is a formula for computation. Like our interest on drawings. All types of deposit except savings account. FD and RD are covered. Sunil deposits in the middle of every month since the interest has not exceeded 40,000. How do I compute the interest? I will do it and show you for you. Question number 5. Okay. deposit amount 18,000 a month, total per annum, okay, 18,000 into 12, interest 21,600, interest 21,600, I mean, sorry, 2,16,000, 2,16,000 into what is the rate? 6% into 6 by 12. Okay, into 6 by, this is the formula, 2,16,000 into 6% into 6 by 12, 6,480. There is no question of any, it has not exceeded 40. Remember, 5,000 is only for non-banking companies' interest. For banking, it is 40,000. Last year itself, it is increased. It's an old question. Last year itself, it has been increased. Annalakshmi Hotel does not permit customers to directly tip the service provider, but collect it as a percentage of bills and distribute the same to all employees. ITC hotels. ITC hotels. It will not be treated as salary, my dear friends. Okay? The amount paid by the employer is not salary. Employer just acts as the collected from customer and provided to the service. It is indirectly customer paying. So 192 liability, that is tedious liability, does not arise. All the properties of Vijay Mallya, okay, V. Mallya, has been seized by the government and now under High Court purview. High Court has ordered all income that needs to be paid to the assessee to be remitted to the High Court. Assessee has made deposit with various banks. Canara Bank case law, where, okay, tax is not liable to be deducted. Oh, sorry, UCO Bank. UCO Bank case law, where interest is paid to the High Court, tax is not liable to be deducted. Okay, UCO Bank case law. Okay, any payment to government, no TDS. Ultimate beneficiary not known, etc. If it is paid to the registrar of court, no TDS. Okay. How will the provision tax deduction be applied for winnings of kind? If so, if there is the assessee default, we all saw this in the second question of Neeraja itself. I am not repeating. The question is Hindustan Levers. It is Hindustan Levers. This is a question which I want to answer and show you also. Okay. Seashore India Limited, a shipping company, had paid to 4 transport operators a sum of 2,50,000 each in the previous year. Transporter A has given proof of having less than 10 vehicles but fails to provide PAN. Transporter B has provided proof as well as PAN that he only holds 10 vehicles. Transporter C has more than 10 vehicles, so neither provides proof nor PAN. Transporter D just provides PAN. Compute the TDS impact. Read it. That's the base provision. Section 194C. If single payment exceeds 30,000 or cumulative payment in a year. When I say payment, paid or payable, in a year exceeds rupees 1 lakh, taxes liable to be deducted at source. Single payment exceeding 30,000, cumulative of payment exceeding rupees 1 lakh, we are very clear, taxes liable to be deducted. Rate of deduction 1% if the receiver is individual or HOF, 2% receiver being others. However, where a resident transport operator provides proof, provides declaration as well as PAN, no TDS liability. Tax is not liable to be deducted. This is the base law. Transporter A, total pay, okay, total consideration 2,50,000. So exceeds threshold. Exceeds threshold. Transporter A has given declaration of having less than 10, but fails to provide PAN. PAN not provided. Therefore, rate of deduction 20%. If PAN is not provided, rate of deduction becomes 20%, my dear friends. Rate of deduction becomes 20%. Hence, tax liable to be deducted 2 lakh, even though he has given a declaration, both these things needs to be fulfilled. If not, rate of deduction, PAN not given, rate of deduction 20%. Transporter B. Okay, transporter B provides declaration as well as PAN. Okay, transporter B has provided proof as well as PAN. Okay, it is assumed he does not own more than 10 vehicles at any time during the previous year, because he has given a declaration at the end of the year. But actually, when we read the provision, we understand any time during the previous year he should not. Okay, so in this case, no TDS. So in this case, no TDS. He has satisfied both the condition, no TDS. Transporter C. Transporter C, okay, has more than 10 vehicles, but neither provides proof nor PAN. Okay, so tax to be deducted is 20%. Okay, exceeds the threshold, PAN not provided. Okay, therefore the tax deduction 20%. transporter B. Okay, what he does, provides PAN, okay, PAN provided, but declaration not provided, assuming he is an individual, okay, 1%. Assuming he is an individual, 1%, otherwise 2%. PAN is provided, so 20% is not applicable, only 1% is applicable. Payment of 40,000 made to Nandita in September 2020 without deducting tax and source. However, while making the next payment of 70,000 in February 2021, tax of total 1,10,000 into 10%, 11,000 was deducted but remitted only in April 21. Is the assessee liable to pay any interest? If so, mention the quantum. Okay, let me theoretically make you understand this interest and then go for practical. Where the assessee fails to pay, deduct, or fails to remit, fails to provide credit, he will be assessee in default. Where assessee fails to deduct, interest is 1% for every month or part of the month also will be taken. Commencing from the month he is liable to deduct and terminates with the month he actually deducts. Commencing from the month in which he is liable to deduct and terminates with the month in which he actually deducts. Okay, where assessee deducts but fails to remit. (1.5% for every month, commencing from the month of deduction and terminating with the month of remittance. 201 interest. Read through. So here is the case. Payment of 40,000 was made to Nandita in September without deducting tax. The tax was deducted only in February. September, October, November, December, Jan, Feb. 6 months, tax not deducted. Once deducted, it has to be paid in the next immediate month before 7th. Only for March you have time up to April 30th. In all other cases, before the 7th of the subsequent month. Here what happens? Whatever I deducted in February, I am remitting only in April. Feb, March, April. Feb also, they commence from the month of deduction till the month of remittance. Okay. Interest on TDS default in case of non-deduction. 1% for every month or part thereof. Total amount paid in September, he paid 40,000. Tax to be deducted at 10%, 40,000 into 10%, 4,000. Tax actually deducted only in Feb. Therefore, non-deduction interest 4,000 into 1% into September, October, November, December, Jan, Feb. Even part of the month will be taken. 6 months. Okay, nothing but September to Feb. Okay, so what happens? 4,000 into 1% into 6 months, 240 rupees. In case of deducted but not remitted within due date. Due date is 7th of subsequent month. However, for March, it is April 30th. Okay, this is the due date. Where not remitted within due date, 1.5% for every month or part thereof. Total deducted but not remitted is 11,000. Okay, tax, okay, is remitted in April. Therefore, interest for non-remittance 11,000 into 1.5% into 3 months. Okay, Feb, March and April. Okay, so repeating 11,000 into 1.5% into 3 months, 495. Okay, total interest. Therefore, total interest under 201. Policies of Mrs. Saraswati Manivannan and Mr. Manivannan matured in April. Saraswati has taken a policy in 2011 for a sum of 10 lakhs on which she had paid a premium of 240. Maturity along with bonus comes to 1150. Unfortunately, she did not provide PAN to the insurance company. Manivannan attained the age of 60 and has taken this policy in Jan 2015 for 3 lakh and paid a premium annually for 50,000. He receives 5 lakh 50,000 in July 20. Okay. According to section 194DA, insurance proceeds will be subject to TDS if it is not exempt under 1010D. What is exemption under 1010D? If the premium exceeds or does not exceed 20% or 10% as the case may be. Okay, okay, right? If the premium, okay, we just saw, okay, uh, where the premium does not exceed 20%, or if the policy is taken on or before 31/3/2012 and on or after 2012. Okay, in this case, okay, the premium has exceeded. Okay, so tax is liable to be deducted. Tax is liable to be deducted if the maturity proceeds exceed 1 lakh. But tax is liable to be deducted on the income only. So I am taking some time to answer it so that we are very clear. Mrs. Saraswati Manivannan. Okay. Policy value 10 lakhs. Policy taken before 31/3/2012. Actual premium, the question says actual premium is 2,40,000. 20% of policy value is 10 lakhs into 20%, 2 lakhs. Premium paid has exceeded 20% of policy value. Premium paid has exceeded 20% of policy value. Hence, maturity proceeds becomes taxable. Hence, maturity proceeds becomes taxable. So, 1010B exemption is not applicable. Maturity proceeds becomes taxable. Total maturity proceeds exceed threshold. Okay, it exceeds threshold. Income difference between maturity proceeds and premium paid. Premium paid will be equal to 10 lakhs. Okay, maturity proceeds is 11,50,000. 11,50,000 minus premium will be equal to policy value 1,50,000. Tax to be deducted normally 5%. Since PAN is not provided, 20%. Since PAN is not provided, 20%. So you will get 1,50,000. This has to be deducted. This has to be deducted. Mr. Manivannan, okay, who attend, oh, there, let's not worry about age, took the policy after, okay. So, policy value 3 lakhs, 3 lakhs or 5 lakhs, 3 lakhs. Policy taken after 1/4/2012. Actual premium, okay, actual premium is 50,000. 10% of policy value, 3 lakhs into 10%. Okay, premium paid exceeds 10% of policy value, hence maturity proceeds becomes taxable. Hence maturity proceeds becomes taxable. Total maturity proceeds, okay, 5,50,000. Income, nothing but difference between maturity and premium, okay, 5,50,000 minus 3 lakhs, 2,50,000, okay, tax to be deducted 5%, okay, tax to be deducted is 5%, so 2,50,000 into 5%. Discount provided to stamp vendors by the government, okay, discount provided for tickets by airline, Ahmedabad stamp vendors and Qatar Airways, okay, Ahmedabad stamp vendors and Qatar Airways, okay. Okay, Ahmedabad stamp vendor, tax is not liable to be deducted. Qatar Airways airline is not aware of the price at which tax are sold, so no TDS. So no TDS. Okay. A member of a cooperative bank who is a senior citizen is paid interest on deposit 70,000. Any payment by a member to a member by a cooperative society is not liable. No, it is not paid in the capacity of a member. It is paid in the capacity of a depositor. Am I paying to everybody interest of 70,000? No. I am not paying to everybody 70,000. You have deposited, so I am paying you interest. This interest, my dear friends, okay, payment by a cooperative society to its members are not taxable, hence TDS will not apply. However, a cooperative bank paying interest to a deposit holder who is also a member is liable to TDS if the total interest exceeds threshold limit. In the given case, senior citizen 50,000, actual payment is 70,000, so tax has to be deducted. You are not getting the money because you are a member. You are getting a money because you are a depositor. So liable for TDS. Withdrawal of 50,000 from RPF, okay, not applicable. 194, 192A threshold limit itself is 50,000. Even if PAN is not furnished, no problem. Only if it exceeds the threshold limit, there is TDS. House property and agricultural land belonging to Rajiv are sold to Prakash at a price of 60 lakhs and 51 lakhs. The actual stamp value being 75 and 60. Let me give you the holistic answer. First, from TDS, only house property, agricultural land is not subjected to TDS. 194 IA, 194 IA, 1% of 60 lakhs. 194 IA, 1% of 60 lakhs. Not on 75 lakhs, not on 60 lakhs. Computation of capital gains for Rajiv. I will take the full value of consideration as 75 and 60, provided it exceeds 110% and it is an urban agricultural land. Computation of gift for Prakash, the difference between stamp value and the consideration paid. Three provisions I have analyzed. Okay. In the hands of Rajiv, 50C is applicable. FVC, actual consideration of stamp value, last year answer I copied, 110%. Okay. In the hands of Prakash, gift provision will be applicable. Okay. And 194 IA is also applicable for immovable property other than agricultural land. Threshold limit 50 lakhs. So he need to deduct. So three provisions can become applicable. (194C) and 194I, letting out of land with mobile tower. Indus case law. Indus towers. Okay. It is neither letting out of land nor contract. It is letting out of equipment, passive usage of infrastructure facility. Indus towers, letting out of plant, machinery and equipment. 194I, 2%. First provision is 10%, second provision is applicable. Divya and Lalita co-owns a property which has been let out for a total rent of rupees 40,000 per month. Both have equal rights, no TDS. SBI case law, and also the law itself is saying it should be per owner threshold. Per owner 20,000, 20,000 into 12, 2,40,000 only, no TDS. In case of co-ownership, threshold limit is per owner. In the given case 240, since the payment has not exceeded threshold limit, this is also a judgment in the case of SBI manager. Swiss Airways enters into an agreement with Madras Airport Authority for landing and parking. Japan Airways and Singapore Airways case law. Not only just the land is allotted for parking, the aerodrome services are bigger than passenger connect. Okay, security check, providing various other services. So 194C is only applicable, not 194I. Refer to the case law, that's why I have written like this. You will refer to the case law. Threshold limit of 194J is 30,000, which covers fees for professional services and technical service. Is it 30,000 for both service or per service? It is 30,000 per service. It is not for both service. It is 30,000 per service. Okay. It has been clarified that the threshold limit is per service. House rent payable to landlord per month 22,000 and maintenance charges 4,000. So totally 26. Is there a liability to deduct? Will your answer different if rupees 4,000 is paid for furniture hire to the same landlord? House rent means all things put together. So if it is 22 plus 4, for a single owner you are paying means you should deduct. So 26,000 into 12 into 10%. However, if it is for furniture hire also, it is the same. There is no change in the answer. 26,000 into 12 into 10%. All payments to the landlord will be covered. 10% needs to be deducted on whole 26,000. Threshold limit will be computed for all rent payable to the assessee by the same person. Payment of 5 lakhs made by JCP and Co to Pingu Events for organizing a debate competition. The question itself, it is an old case law. Now it is not a relevant case law for you. Payment to an event manager, is the tax to be deducted at 10% or 2%? The answer is 2%. Event management is not just a professional activity. Event management is not a professional activity, my dear friends. The tax to be deducted is 2%. Okay, event management is a general activity and not professional activity. Hence, tax to be deducted is only under 194C. It's an old case law. That's why that question came that time. Profit commission of 1 lakh paid to reinsurance company. Any payment made for reinsurance, no TDS. It is between two insurance companies. Direct commission, commission paid to agent, okay, will be coming under 194 G, okay. Direct payment of commission to agent. Reinsurance commission, it is one insurance company to another insurance company, okay, to secure, so it will not be covered. Provision specifically exempt commission paid for reinsurance, so tax is not liable. It is by one insurance company to another. I missed this point in commission. Please remember, reinsurance will not come under this. AD, a part-time director of a company, was paid 2,25,000 as fees, which is in the nature of commission on sales. Friends, please remember, any payment to a director other than salaries is covered under 194J. Okay? Payment to a director which forms part of salary 192. Payment to a director other than salary 194J, no threshold, right from rupee 1 taxable. Now it all depends upon whether this commission is treated as a salary or not. If this commission is treated as salary, 192, otherwise 194J. Otherwise 194J. Any payment other than remuneration 194J nil. In the given case, since he is a part-time director, assuming that the company is not paying remuneration, taxes liable to be deducted at 10%. 10%. We'll stop with 20-50 question, take a break and come back again. Karthik residing in a rented property for which he claims HRA benefit pays 60,000 to the owner of the property. Okay, I will take up this question. Okay. Section 194 IB applicable where 194 I is not applicable. Okay, so he is not a business associate, he is a salaried associate. Threshold limit 50,000 per month. Actual rent paid in this case is 60,000 per month. Hence 194 IB is applicable. Hence 194 IB is applicable. Total rent for the year 60,000 into 12. Okay. Total rent for the year is 7,20,000. Rate of TDS, okay, 5%. Rate of TDS 5%. Tax to be deducted, okay, in the month of March, okay, last month of the year or tenancy. Suppose if he vacates in December itself. Here it is March. Okay, 7,20,000 into 5%. 36,000. 36,000. So, in the month of March, Karthik will pay to the government account 36,000 to landlord, okay, 60 minus 36, 24,000. Transaction charges paid to the members for availing fully automated online trading facility Kotak Mahindra case law. It is not a specific services rendered to a member. It is always available. Any member can avail it. Kotak Mahindra. So you will deduct tax. You will deduct tax under 194C and not 194J. Kotak Mahindra. It is not specialized service, it is a facility available for payment. Hence, it will not be treated under 194J. Twenty-sixth question. Shivaram books an apartment at a cost of 4750, and for other amenities he is liable to pay 5 lakhs. The builder is of the opinion that tax is not liable to be deducted at source as the cost of the apartment has not exceeded 50 lakhs. But I told you 194 IA speaks about total consideration. 194 IA is not speaking about just the cost of the apartment. If the total consideration, it is an amendment in 2019, okay, the term consideration includes all charges paid for acquiring the property and not just the property value alone. In the given case, total consideration is 52,500 and it exceeds the threshold limit, so 1% tax has to be deducted at source and paid. So it is total consideration, remember that. Mudra Adco, an advertising company, has retained a sum of 15 lakhs towards charges for procuring and canvassing advertisement from a payment of 1 crore due to Cloud TV, a television channel, and remitted the balance 85 lakhs to the channel. Would the provisions of section 194H be applicable? After the Prachar Bharati case law, it is applicable. Previously, a circular gave exemption for this. Okay. Circular 5, okay, TDS on payment by television channel and publishing house to advertising company for procuring or canvassing. Basically, the payment is made by client which attract TDS. In other words, client is liable to deduct. Payment made by the advertising agency to the television channel or newspaper, okay, TDS provisions are not applicable. This circular is overruled by the Supreme Court judgment in Prachar Bharati case. Now, yes, on that 15,000 TDS is applicable. So even though they are remitting 15,000, a debit note will be raised by the television company or the news channel saying 15,000 into 5%. Okay, 750 is deducted and they will send a debit note, okay, to them or get from them 85,750, remit 750 as TDS and on that 15,000. Now it is, this circular is overruled. Moon TV, a television channel, made a payment of 50 lakhs to a production house for production of program for telecasting as per that specification given by the channel. The copyright of the program is also transferred to Moon TV. Would the payment be liable for tax deduction under 194C? Also examine whether provisions of tax at source under 194C would be attracted if the payment of Moon TV is for the acquisition of telecasting rights. Okay. It is same like 194C for manufacture of goods. The solution for the question depends on whether the payment is for the content or program after the specification of the broadcaster or telecaster, or the payment is for acquisition of right. Acquisition of right, 194J. Acquisition of right is 194J. That is royalty of the content already with the production house. In case of content produced as per the specification provided, then it is works contract and 194C. In case it is just acquisition of rights, it is 194J and not 194C. One benefit from this year is there also it is 2%. There also films, cinema, okay, any broadcasting, telecasting, or any exhibition of films, it's only 2%. Messrs Coolship Limited entered into an agreement for the warehousing of its product with Top Store Warehousing and deducted tax as per 194C. You all know warehousing will come under 194I out of the warehousing charges. The AO, while completing the assessment, treat out the warehousing charges under 194I and ask the company to make the payment of difference amount to TDS with interest. It was submitted by the company that the recipient has already paid a tax on the entire amount of warehousing charges, and therefore now the difference amount of TDS need not be recovered. However, it will make the payment of interest on the difference amount of TDS. Examine critically, yes. We saw in 40 itself, where the receiver submits proof that he has considered it as income and paid his taxes and paid due taxes for this, then you need not deduct again. However, for non-deduction, interest has to be paid at the rate of 1% from the month in which you are supposed to deduct till the date of filing of return by the receiver. For non-deduction, interest needs to be paid by the party, paid by the payer from the month of deduction till the date of filing return by the receiver. Hope I have written it also. Is correct in their contention that the receiver submits proof that the amount received is considered as income and due taxes are paid, then taxpayer is not liable. However, the taxpayer has to bear the interest liability 1 month from the month the supposed to be deducted till the proof is submitted, till the return is filed. That's what is the proof, okay, by the receiver. Connected. One minute. AK Limited, third-party administrator on behalf of insurance company, has settled bills of 5 lakhs submitted by a hospital from a patient under a cashless scheme. Hospital is providing professional services. Hospital is providing, the doctors are providing professional services, and the insurance company or third party, whoever is acting on behalf of the insurance company, settling hospital bills will be covered under 194J. Will be covered under 194J, my dear friends. Okay, hospital is providing okay, professional services, okay, and it will be covered under 194J, okay. Third party administrator who are making payment on behalf of the insurance companies to hospitals under various schemes, including cashless schemes, are liable to deduct tax under 194J on all such payment. Services rendered by hospitals are primarily medical services, which will fall under professional category. Payment to a call center, 2%, my dear friends. Payment to a call center, 2%. Veemraj is an individual. He makes payment to a resident consultant or a resident contractor for a work contract or to a resident by way of commission or brokerage. Amount of payment is 27,000 and 26,000. Examine. A. Veemaraj is a businessman. His books are audited every year, but payment to a consultant or contractor or broker is for business purposes. Okay, let me start answering this question. Okay, what is this provision I am covering? Okay, section 194M. Applicable if section 194C, 194H and 194J are not applicable. Okay, let me look at positively. Applicable for individuals and HUF not carrying on any business. Okay, for them also it is applicable. Carrying on business, but the turnover or gross receipts does not exceed 1 crore or 50 lakhs. Carrying on business, turnover exceeds, but the payment is not a business payment. Okay, 194M, whom it is applicable? Applicable for individuals and HUF not carrying on any business, or they are carrying on business but the turnover does not exceed 1 crore or 50 lakhs. They are carrying on business, turnover also exceeds, but the payment is not a business payment. Now, case A. Imraj is a businessman, books are audited. Okay, since he is a businessman, payment is a business payment and turnover has exceeded, then only audit is mandatory. Okay, it is covered under 194C or 194H or 194J. So 194M is not applicable. 194M is not applicable. It would have been covered under C, H or J. What type of payment is this? He pays to a work contract 27,000 and 26,000. So 1% or 2% as the case may be. Veemaraj is a businessman. Books are not audited in the immediately preceding financial year. Payment to a consultant is for business purposes. Case B, 194M is applicable. Why? Because 194C is not applicable. In the immediate preceding year, it has exceeded. Okay. Total payment has also exceeded the threshold of 50 lakhs. Okay, you can see the total payment as 27 plus 26, 53 lakhs. It has exceeded. Hence, tax liable to be deducted. 1% you are liable to deduct tax. Payment to a consultant is for personal purposes. Okay, 194M is applicable. Why? Because payment exceeds the threshold limit and not covered under 194C. So you have to deduct tax. So you have to deduct tax. Case D. Imraj is a non-resident Indian. He does not have any income in India. Payment is for personal purposes. Case D. 194M is applicable. Okay, it is applicable for all individuals and HUF not covered in the specified sections. Question number 33. Okay, discuss the TDS or TCS implication of the same. X is a bookmaker, Mr. Y is a punter. Horse race 50,000 and 20,000. This loss cannot be adjusted. Loss cannot be adjusted. On that 50,000, we need to deduct 10%. On that 50,000, we need to deduct 10%. Okay. Any person being a bookmaker is also responsible for paying income exceeding 10,000 a day. There is no question of setting off of losses. Hence, 50,000 into 30%. Okay, 15,000. The net amount to be payable to the receiver is 50 minus 20 minus 50. That's not asked, chumma I wrote. Mr. Santosh lets out his house property on a monthly rent of 60,000 from 15/1. So, threshold limit is per month here. Threshold limit is per month. So, even if it is 2.5 months, 60,000 into 2.5, 1,50,000 into 5% should be deducted in the month of March. Third question is TCS. Let's see later. Fourth question, third party administrator, which we have seen. Before going to the 34th question, let us look into what is this 234E. That is for I have already told you it's for non filing of returns, ETDS returns. Interest is liable to be paid if ETDS returns are not filed within due date. Okay, it is 1 month from the end of the quarter. However, for March 31st May, where it is not filed, 200 per day of default. However, the maximum cannot exceed the tax. We told in PGBP this interest is allowed as deduction because this is not against our tax. Law of interpretation 234 ABC or interest for non-payment of tax of the assessee. So while computing the total income, these are not allowed. There is an interpretation. 234E is for non-payment of tax of some other person, not a penalty. It is only interest. Hence, it is allowed as deduction under 37. Madhusoodan is regular in deducting tax at source and depositing the same. In respect of the quarter ending 31st December, a sum of 80,000 was deducted from the contractor. The statement of TDS was filed on 23rd March 2021 for the quarter ending 31/12. Is there any delay in the part of Madhusoodan in filing the statement of TDS? If above, how much can be levied as default? Is there any remedy available? Okay. For the quarter ending 31st December, due date of filing ETDS returns is 31st Jan 2021. Where there is a delay, default exists, and assessee is liable to pay rupees 200 per day of default. Per day of default. Date of actual filing. Date of actual filing 23rd March. Delay period, how many days? Feb 28 days plus March 23 days. Feb 28 days plus March 23 days, 51 days. Total interest payable, okay, 200 into 51. 200 into 51. Total interest payable, 10,200. Not exceeding the TDS, hence wholly payable. Hence wholly payable. Only recourse available is if you show just and sufficient reason for the delay, the AO may drop it. If you show just and sufficient reasons, the AO may drop it. I have not included the amendments because I believe that students would have seen the amendment lecture. I want you to see the amendment lecture. I have 10 questions on amendment there, both 194N, 194O in detailed in the amendment lectures. So I want you to see there the amendment lectures. At least the questions you should work it out. At least the section questions you should work it out. So I have been or I'm very confident that you will see the amendment lectures also. What is going to be the question from TDS? The two new case laws, especially software related possibility. 194O is a questionable area. 194O is a questionable area. Maybe 194N. Randomly they can pick something. But be sure about the two new case laws and 194O. Okay. Okay, there is out of 8 marks we should sweep that 8 marks. Okay, COVID year rate. Should this be applicable for you? My answer is no. If you remember the base rate, that is sufficient. Because by the time you write the examination, this is over long back. You are writing it in December, this is over with March 21. So if you remember the base rate, it is sufficient. COVID year rate is base rate minus 25%. Okay, not necessary you should remember it. I don't think it's going to be questioned at all, so do not worry. Okay. Out of the 4 questions that are going to come, one sure shot TCS question, 8 marks if I allocate, 3 marks to TDS and 1 sure shot question, or there might even be 2 sure shot questions in TCS because of the new incorporation of this overseas payment and sale of goods. For that, I haven't seen what question has come. I'm honest to you. This we answer. On 17/6, a commission of 40,000 was resigned by the consignee and not remitted to the consignor. Commission means TDS 5%. Just because he has not remitted, don't think TDS is not there. Surely there, 5% TDS. Mr. Harish, an employee of company, resigned and withdrew. Okay. We have already done this question. Okay. So no problem. Pavam Construction Limited sells a flat to Mr. Money, 48 lakhs. The agreement to sell provides that in addition, maintenance charges for 24 months, 2 lakhs for parking to be used exclusively by him, and 1 lakh club membership fees. I just told you, we just worked out. Okay, not even amendments are questioned in July. Okay, 51 lakhs, it exceeds. When I say consideration, it includes everything. So since amendment was not asked, all the more be sure about 194A, 194N and the recent case laws. Case law was also not asked surprisingly, but case law is a November edition. Okay, so please be sure about it. Please be sure about it. Okay, 8 marks. Remember, all the 4 questions are very simple. Okay, 8 marks. Okay. Okay, TDS will be a very simple question only. Very, very simple, straightforward question. Okay, whatever I have worked out is examination questions. So here also, rates are available for COVID year, don't worry, but let us see 206C. Mainly, you should remember it is for Three or four things you should remember: liquor, scrap sales, all forest products. Liquor 1%, scrap sales 1%, all timber obtained on forest, obtained by any other mode, any other forest product, everything 2.5%. Everything 2.5%, 10 leaves alone 5. And then comes lease on toll plaza 2%. These three are mandatory questionable area. Sale of motor vehicle exceeding the value of 10 lakhs 1%. Overseas remittance for an overseas tour package from 1st October 2020. Provision itself is from 1st October 2020, 5%. And sale of goods of the value exceeding 50 lakhs, 0.1%, again from 1st October 2020, but to compute the sale, I will take the full year. The first amendment is about overseas tour package. Okay, from 1st October 2020, it is an amendment. Anybody going on a foreign tour, of course in a COVID year we cannot speak about this, but any foreign remittances now attract TDS, including educational fees paid, loan for interest on loan taken for educational fees. The provision is applicable for authorized dealer who receives amount under liberalized. So he is the one who converts and gives you. Apart from the banker, he is the one who converts and gives you the money. Provision is applicable for an authorized dealer who receives money under LRS or Thomas Cook, or any 12-day trip to Europe, 15 days trip to US, 5-day trip to Middle East, seller of an overseas tour package program. Tax has to be collected either at the time of receipt or debit, whichever is earlier. Rate is 5%. Other collections. Other collection means other than tour package program. For tour package program, right from rupee 1 TDS is applicable. For TCS is applicable. For tour package program, right from rupee 1 TCS is applicable. For tour package program, right from rupee 1 TCS is applicable. Where the amount remitted exceeds 7 lakhs. For other than tour package, up to 7 lakhs, basic exemption, threshold limit. Exceeds 7 lakhs, 5% of the amount exceeding 7 lakhs. Other than tour package, and where the remittance is towards a loan obtained from a financial institution for the purpose of pursuing higher studies, again up to 7 lakhs nil, more than 7 lakhs 0.5%. The ground rule is, if there is TDS, no TCS. Read through. Shall I again consolidate? Up to rupees 7 lakhs. Okay, no TDS, but not for tour package. Tour package right from rupee 1. Dubai, 5 days, 2 lakhs. You have to deduct tax at 5% or collect tax at 5%. From the person who is booking for 2 lakhs, you have to collect another 10,000. So 2 lakh 10,000, remit that 10,000 to the government. Other than tour package, threshold limit 7 lakhs, TDS 5% on the amount exceeding 7 lakhs. So if I remit 11 lakhs, 4 lakhs into 5%. Further, if it is towards a repayment of an educational loan in excess of 7 lakhs, but the rate is not 5%, just 0.5%. 0.5%. The next amendment is sale of goods exceeding 50 lakhs. Sale of goods exceeding 50 lakhs again from 1st October. Provision is applicable for seller whose turnover exceeds 10 crores in 1920. For the year 2021, is it applicable or not? Depends on the turnover of 1920. For 21-22, is it applicable or not? Depends upon the turnover of 2021. So, in the preceding year, previous year means that year for which you are computing the income. Preceding year means year before the previous year. Okay, provision is applicable if the turnover exceeds 10 crore in the immediately preceding financial year. Provision is applicable if the sale consideration is received. Bad debts are not applicable as the consideration for sale of goods exceeds 50 lakhs. Collect from him extra 0.1%. Extra 0.1%. Exceeding 50 lakhs. TCS is 0.1% exceeding 50 lakhs. Where the buyer fails to provide PAN or Aadhaar, then tax is required to be collected at twice the rate or 1%, which is higher, so 0.2%. 0.2%. TCS is not applicable if the buyer is government, local authority, embassy, or import of goods. Hence, it is understood it is only for local purchase. Imports are not considered from a resident assessee. Okay. Clarification. There are a lot of clarification. Again, questionable areas. Especially, I feel motor car will be a questionable area. And these clarifications are given together both for 194O and 206H. These clarifications are not only for 206H, it is also computation of threshold limit. We told in 194O itself, though the amendment is from 1st October, threshold limit will be completed for all year. Provision is applicable from 1st October. Hence, any sale consideration received before 30th September, TCS not applicable. However, for computing the threshold limit, 50 lakhs, the consideration received for all of the financial year will be taken. Technically, this means even if already 50 lakhs is received on or before 30th September, then TCS is applicable for all consideration received on or after 1st October, right from rupee 1, because already it is over. Further clarified by CBDT, even if the sum of consideration received on or before 30th September exceeds 50 lakhs, further no TCS. Such a sum is not liable under TCS provision because when there is no levy, there is no collection. Only whatever is received from 1st October is there. This is also for 194A. On transaction carried out through stock exchange, TCS provision shall not be applicable in relation to SEBI transaction stock exchange carried out through recognized stock exchange, including those located at IFSC, transaction in electricity, renewable energy certificate, energy saving certificate traded through power exchanges also, it is not included. I believe this is going to be one other questionable area. Sale of motor vehicles exceeding 10 lakhs, 1%. Sale of goods valuing more than 50 lakhs, 0.1%. You are buying an Audi car for 70 lakhs. Is this provision applicable or this provision applicable? Whichever is beneficial to the revenue. So they say this 206C is only applicable. 206H is not applicable. So the law says where 206C is applicable, 206H is not applicable. So if you are buying an Audi car, you cannot demand, no, I will pay under 206H. Only 206C is applicable. One. Second, this sale of motor car of a value exceeding 10 lakhs is not applicable for dealers. Maruti or Das Auto, BMWs. They sell through a dealer. Dealer sells to customer. Company sells to dealer. Dealer sells to customer. Company selling to dealer, 206C is not applicable, but 206H becomes applicable. What is 206H saying? 206H is applicable wherever 206C is not applicable. So company selling to a dealer, 206C is not applicable. So 206H is applicable. Third case. You are buying a car for 9 lakhs. Is 206C applicable? No, not applicable. If the value of the car does not exceed 10 lakhs, not applicable. For your company, you are buying 9 lakhs worth of car, 10 cars. For your company, you are buying 9 lakhs worth of car, totally 10 cars. 206C is not applicable. Why? Because value of a car does not exceed 10 lakhs. 206H is applicable. 206H is applicable. Why? Because total turnover has exceeded 50 lakhs consideration. So for motor car, one bottom line, 206H will apply wherever 206C is not applicable. Okay, right? Applicability on sale of motor car. There are two sections which cover 206C, 206CH, FH. Where the sale is made by the manufacturer or any other person to a dealer, 206C, F is not applicable, whereas H is applicable. It's subsection. Okay. Where sale is made to a customer, but the individual unit of the car does not exceed 10 lakhs, but collectively exceeds 50 lakhs, 206H is applicable. Where sale is made to a customer and the provisions of 206C 1F is applicable, 206C 1H will not be applicable. Remember this questionable area. adjustment for sales returns, discount and taxes. Obviously, this cannot be adjustment as the provision is based on sale rate. When you have received the sales return and all, you would have adjusted and then only. So why to worry about it? Provisions are not applicable for consideration received by non-resident airline operator or fuel supply. Okay. Of course, I have worked this in our normal working also, but a quick look at the practical question. Before that, can you please read it once? There is only one case law you have to remember, prior shipping, where they have said, if a ship is broken and sold, that is known as scrap sales, you have to, TCS provisions are applicable 1%. But one of the benefit the law gives is, if that can be reused, then it is no more called as scrap. If a ship is broken and the broken parts can be reused, then how do you call it as scrap? So it is not considered as scrap at all. Please read through. Shall I? Shall I? Question number 1. Specify the tax to be collected at source. Sale of timber in April 2020. Please remember the tax is 2.5%. Though this question I have given you the answer COVID year rate also, but you are asked to remember the base rate, not COVID year rate, don't worry. Okay, 2.5%. Same type of timber in a September 2020, you will get that minus 25%. Okay, some 1.75% or so, but don't worry. Liquor for human consumption, 1% only, there is no COVID year rate for that. There is no COVID year rate for that 1%. 2.5% sale of timber. Sale of scrap, where buyer fails to provide PAN. In the case of TCS, PAN is twice the rate or 5%, whichever is higher. Repeating, only for 2061H it is different. For other things, twice the rate or 5%, whichever is higher. For the sale of 50 lakhs or more, twice the rate or 1%, whichever is higher. That is the difference. That is the difference. Okay, you can see 2.5, 1.875, 1%, 1%, twice the rate or 5%, whichever is higher. Okay, COVID year date not applicable for PAN not provided, hence it is 5%. Don't worry much about this. Okay. In the following cases, specify the tax to be collected at source. Thomas Cook, a foreign tour operator, has various tour package. Karthikeyan avails 15 days Europe package for himself and his family members, 20 lakhs. My dear friend, 5% tax to be collected at source. 5% tax to be collected at source. Okay, 5% tax to be collected at source. Okay, 5% tax to be collected at source. Lalita avails for 2,50,000, no threshold. The 7 lakh threshold is not available. So no threshold, 5%. Joyful Singapore package availed by Sreevathson. Sreevathson fails to provide PAN. Twice the rate or 5%, whichever is higher. Twice the rate is 10%. However, approaches we convert Forex authorized dealer for making few Forex payment. The dealer approaches you to understand the TCS impact. Payment to a hospital for medical treatment exceeds 7 lakhs. On the excess 3 lakhs, 5%. On the excess 3 lakhs, 5%. Donation to Dayananda Mutt not exceeding 7 lakhs, no TDS. Not exceeding 7 lakhs, no TDS. Repayment of loan 50,000 into 0.5%. 50,000 into 0.5%. Amount exceeding into 0.5%. Repayment of a loan for film project 4 lakhs, amount exceeding 7 lakhs. 4 lakhs into 5%. 4 lakhs into 5%. Payment for hiring private jet. TDS is applicable. Wherever TDS is applicable, TCS is not applicable. Part A, 3 lakhs into 5%. So the authorized dealer will collect 15,000, 10 lakh 15. Donation, the quantum has not exceeded threshold, no TCS. Educational, 7 lakhs, no TCS, 50,000 into 5%. Loan project, 7 lakhs, no TDS, 4 lakhs into 5%, 20,000. AD means authorized dealer shall collect. The ground rule is that wherever TDS is applicable, TCS is not applicable. Where the assessee is liable to deduct tax, then authorized dealer is not liable to collect TCS. Questionable areas, friends. Specify the tax to be collected at source TCS on the following. Maruti, a car manufacturing company, sells car through various dealers. So it is dealers. 206C 1F is not applicable. 206C 1H is only applicable, because sales to dealers will come under. The following are the details. dealer Ram up to September 1 crore 5 lakhs. So already exceeded. But for the remaining 55 lakhs, you cannot collect 1 crore 40 lakhs into 0.1%. 1 crore 5 lakhs up to September. For computing the threshold limit, I will take the full year. But TCS is applicable only from 1st October. So 1 crore 40 lakhs into 0.1% or 0.075 COVID year. Lakshman is interesting. 45 lakhs, 60. On 65 lakhs, another 5 lakhs you cannot collect TCS. Because on the amount exceeding 50 lakhs only, so sale up to 30th September, 45, another 5 lakhs leave it, remaining 60 lakhs into point. Bharathan, 1 crore 5 already exceeded. So even though now it is just 25 lakhs into 0.1. Because for computing the threshold limit, I will take the full year. Shatrugnan, 25 lakhs. Out of 1 crore 5 lakhs, another 25 lakhs leave it. 80 lakhs into 0.1%. 80 lakhs into 0.1%. Guhan, nothing. Even though it has exceeded, there is no consideration received from October to March. Provision is applicable only here, so nil. Vibhishan, on this 1 crore into 0.2%, twice the rate or 1%, whichever is higher. Twice the rate or 1%, I mean 1%, whichever is higher. Threshold limit exceeded before 30th. However, for such excess TCS can never be collected. Consideration received after 1st October is liable for 0.1%. OBDR rate if you want, but don't worry. Lakshman, consideration received up to 30th September 45. The first 5 lakhs received on or after 1st October is not liable. The balance is on 0.1%. So out of 65 lakhs, only 60 lakhs into 0.1%. Bharathan, threshold exceeded before 30th September. However, for such excess, TCS cannot be considered. Consideration received after 1st October, even though it is less than 50 lakhs, it will come. Shatrugnan, consideration received up to 30th September 25. The first 25 is not liable to TDS, so 80 lakhs into 0.1%. Guhan, consideration received up to 30th exceeds 50 lakhs. However, nothing is received from 1st October, no TCS. And Vibhishan, 0.2%. No, 1%, sorry. Whichever is higher. 1%. Sorry. Twice the rate. 0.2 or 1%, whichever is higher. question number 5. A car dealer approaches you on the quantum of TCS. RK Private Limited purchases one car every month, the consideration being 8 lakhs per car. So up to, it is not exceeding 10 lakhs, so 206C 1F not applicable. 206C 1H applicable. Up to September, 8 into 6, 48 lakhs. No TDS. October to March, first 2 lakhs no TDS, remaining 46 TCS, remaining 46 lakhs into 0.1%. Section 206(1)(c) if not applicable as the single unit does not exceed 10 lakh. However, if the cumulative exceeds 50 lakhs, 1H is applicable. Consideration up to 30th September for 6 cars. From October, 48 lakhs. Since the threshold is 50 lakh, consideration received after October, 0.1% TCS only on the amount exceeding 50 lakhs. So it is, though even though 48 lakhs, first 2 lakhs is not taxable. 46 lakhs, either I might have considered COVID rate just to give you an answer, but 1% you can put, 0.1%. RK Limited purchases 2 cars. Car 1 26 lakhs, car 2 41 lakhs. 206C1F is only applicable. Okay, 206C1F is only applicable and rate is 1% or 0.75%. Each car consideration exceeds 50 lakh, 10 lakhs, so 1% should be collected. Because this is non-COVID rate. COVID rate started from 14th May 2019. Now you need not remember it. I don't think they will be. Public Works Department, Government of Haryana purchases. For government, no TDS, no TCS. Specify the circumstances in which it is not applicable. Import not applicable. Government contracts not applicable. Okay. Wherever TDS provision, TCS is not applicable for if the buyer is government, local authority, embassy or import of goods. Provision is also not applicable for non-resident airline operator. Stock exchanges not applicable. Stock exchanges also not applicable. Okay. Okay. Sure short questions. Simple question, straightforward, but sure short question. TDS, TCS constitute 8 marks. Do not miss. 8 out of 8 is possible there.
Before assessment of individuals, completing that, there is one other topic along with TDS and TCS, which is advance tax. They are all linked topics. They are all linked topics as to what is the advance tax, who is liable to pay, if you are not paying, what are all the consequences. All assessees have to pay advance tax. I will come to the exceptions later. Okay. And the advance tax mechanism is set in 208 to 219. It is paid in the same year in which income is earned. What is advance tax? Tax paid in the same year in which income is earned. That is known as advance tax. Assessee is supposed to estimate his total income and pay the taxes. He is supposed to estimate the total income and pay the taxes. So AO now has the right to say, ask for how you estimated your income, etc. Now, who need not pay advance tax? Assessees whose tax due does not exceed 10,000. senior citizens who does not have business income, and assessees who have opted for presumptive computation, we have worked out a question also, is liable to pay only the last installment 44 AD, ADA, AE. That assessee is liable to pay only the last installment, and the installments of advance tax is like this: 15% if it is on or before 15th June, 45% 15th September, 75% 15th December, and 100% 15th March. Tax paid till 31st March, I told you, in that year if you pay, it is known as advance tax. In that year, even though I have marked here 15th March, but if you pay it in that year, it is sufficient. I will call it as advance tax. After that date, whatever you pay is known as 140A, self-assessment tax. I also understand, the department, the lawmakers also understand, winnings and capital gains you cannot estimate. So you need not pay advance tax for it. Pay the full tax as soon as it accrues. You are given one exemption. You are not expected to, can I on the 1st April think this year capital gains will be so much, this year I will be able to win something? I know you cannot estimate. So you need not pay tax, advance tax for it. But once it has arisen, there is no more estimation. Pay 100% tax in the immediate next installment. So on 1st December, you get a capital gain. 15th December, pay the full tax. September 15th, June 15th, you need not pay 15% of it, 45% of it. But on 15th December, 100% of the taxes for such winnings or capital gain should have been paid. (234) ABC interest. I will keep explaining this by taking a practical question so that you are very clear about it. Okay, you have the theory. I will keep explaining by doing a practical question. Okay, so that you are very clear about it. Okay. Oh my God. Okay, I will work a practical question. Please consider the examples. Okay, I will work a practical question and you will be able to better appreciate it. I will work out some practical questions. X Limited, okay, domestic company, taxable at 25%, declares a total income of, let us take some 80 lakhs. Tax credit, which is nothing but TDS credit, okay, 3 lakhs. Advance tax paid per installment, okay, per installment, let us take 2 lakhs. Due date of filing returns 31st October, actual date of filing 28th October, compute the total tax along with interest, okay, payable at the time of filing. Please write down the question. Lot of things I will make you understand. Total base tax 80 lakhs into 25%. Add HEC at the rate of 4%. Total tax payable 20 lakhs plus 80,000, 20 lakh 80,000, less TDS credit 3 lakhs. This is known as tax due. What is known as tax due? After adjusting TDS credit. After adjusting TDS credit. This is important theoretically because everywhere you can see 15% of tax due, where the tax due does not exceed 10,000. So, theoretically, this is a very important step. What is the tax due? 17 lakh 80,000. Less advance tax 2 lakhs per installment they are paying into 4 installments. 2 lakhs per installment into 4 installments. So you get balance tax payable, okay, 1780 minus 8 lakhs. Balance tax payable 9 lakh 80,000, 1780 minus 8 lakhs, 9 lakh 80,000. Add interest, okay, 234A not applicable as ROI is filed before due date. Return of income filed before due date 234A is not applicable. 31st October is the due date. I filed it on 28th October, so no problem, no question of 234A. 234B. Non-payment of at least 90% as advance tax. Okay, I'll make a small change. I'll take this to the next column. Non-payment of at least 90%. 90% of tax due, which is nothing but 17 lakh 80,000 into 90%, which is nothing but 17 lakh 80,000 into 90%. Actual advance tax paid, we all know, is only 8 lakhs. Hence, 234B arises. Shall I read the theory? Shall I read the theory? Assessee is liable to pay before previous year end at least 90% of his total tax due. Where there is non-payment or short payment, interest needs to be paid. Interest will be 1% for every month or part thereof, commencing from April till you have paid it. Okay, so 234B arises. Interest, now understand, 9,80,000 balance tax payable into 1% into April, May, June, July, August, September, October. Once more, April, May, June, July, August, September, October. 7 months. Why I am saying 7 months? Because it is April to October. Okay, so 9,80,000 into 1% into 7 months. What mistake we should not do? Here there is a difference of 8,02,000. We should not put interest on this. Where 90% is not paid, this is only to check the condition whether 90% is paid. Where it is not paid, on the balance tax payable, you should compute the interest. Repeating, where it is not paid, on the balance tax payable, compute the interest, not otherwise. Non-payment or short payment of installments of advance tax. Non-payment or short payment of installments of advance tax. Let me leave 2-3 lines and come to, okay, working note for 234C. Working note for 234C. Actual, I will explain you. First, 15th June. Actual to be paid 15% of tax due. Remember, tax due is the crucial point. What is tax due? 17,80,000. Okay, 17,80,000 into 15%. Okay, 17,80,000 into 15%. 2,67,000. 234C not applicable if at least 12% is paid. That is the thing you have to remember. In the case, 234C is not applicable. Like there 90%. Here at least 12% is paid. So 17,80,000 into 12%. In this case, not paid, so 234C becomes applicable. Okay. Actual paid is 2 lakhs. Actual paid is 2 lakhs. Shortfall is 2,67,000 minus 2,67,000. Interest 67,000 into 1% into 3 months. 67,000 into 1% into 3 months. Why 3 months? Next installment is in September 15, so 3 months. 15th September. Understand here, actual to be paid 17,80,000 into 45%. 17,80,000 into 45%. 234C is not applicable if at least 36% is paid. If at least 36% is paid, okay, the second installment at least pay 36%, but you have actually paid only 4 lakhs. First installment of 2 lakhs, next installment of 2 lakhs, so 4 lakhs. So interest will be claimed. First 2 installments alone, this you have to compute. That is, what is the, he has at least 12% or 36% been paid. Has at least 12% or 36% been paid. First 2 installment alone. Now I will go and read the theory. Assessee is liable to pay 15, 45, 75, 100 as advance tax. Where there is non-payment or short payment, then interest is to be computed. However, if the June installment is at least 12%, September installment is 36%, then interest will not be computed. Otherwise, interest will be 1% for 3 months for the first 3 quarters, 1% for 1 month for the March installment. 1 minute. You keep looking into it. Class came. 1 minute. Satvik. So the first 2 installments only, please be careful if there is a question. Then it becomes simple, okay. In exam you will not do such a long working, don't worry. 15th December, okay. 45, here 75. This will be 75% of tax due. 75% of tax due. Okay, right? There is nothing like this. Actual paid is 6 lakhs. Actual paid is 6 lakhs. Okay, and the interest will be for 7,35,000. 7,35,000 into 1% into 3. Last installment, something more to understand. It is only 1 month, okay. 15th March, you should have paid 100%. Okay, you should have paid 100%. Okay, you have paid only 8 lakhs. But the interest will be computed only for 1 month. 9,80,000 into 1% into only 1 month, that is March month, that 15 days, part of the month will be treated as 1 month into 1 month. So the total interest under 234C will be, okay, 2010 plus 12030 plus 22050 plus 9800. (234F) fees for late filing not applicable because you have filed on time. Therefore, okay, tax and interest payable as self assessment. Okay, tax and interest payable, you will pay it as a self assessment tax and self assessment interest. Okay. Question number 2. Individual having total income, let us take 65 lakhs. Let us take 65 lakhs. Tax credit, okay, tax credit some 4 lakhs. Advance tax, okay, per installment 3 lakhs. Advance tax per installment 3 lakhs. Due date of filing 31st July, for example. Actual date of filing 1st November. Compute the total sum payable at the time of filing. base tax on total income 65 lakhs minus 10 lakhs into 30% plus 1,12,500. 55 lakhs into 30% plus 1,12,500. Add surcharge at the rate of 10%. Add HEC at the rate of 4%. Total tax payable, I should change the column. Less tax credit 4 lakhs. Balance tax payable 16 lakh 16,300. 1616300. 1616300 less advance tax 3 lakh into 4 installments 12 lakhs. 3 lakhs into 4 installments 12 lakhs. This is tax due, sorry. This is tax due, the most important step in our interest calculation. Balance tax payable 1616 to minus 12 lakhs. Add interest 234A for belated filing of return. Okay, my dear friends, return has to be filed on or before the due date. Where return is filed after the due date, assessee is liable to pay interest. Interest is payable even if advance tax is not liable to be paid. Okay, 1% for every month or part thereof. So 4,16,300, 4,16,300 into 1% into August, September, October, November. Even one day will be taken as 1 month. November 1st, you have to work for November also. July 31st due date, August, September, October, November. Okay, 4 months, nothing but August to November. Okay, 4,16,300 into 1% into 4. One small thing. Two 34B for short payment of at least 90% of tax due as advance tax. Let us do that. 90% of tax due. Okay, so 16 lakh 16,300 into 90%. Actual advance tax is only 12 lakhs. Okay, 90% condition not met. So interest will be balance tax payable into 1% from April to November. Okay, repeating, 4,16,300 into 1% into April, May, June, July, August, September, October, November, 8 months. Okay, 8 months, nothing but April to November. April to November. Repeating, 4 lakh 16,300 into 1% into 8. (234C) we will work out. 234F, again belated filing of returns. $5,000. If it is after December, 10,000. If it is after December, fees 5,000 before December, 10,000 after December. Okay. So now I work 234C. I will take the previous working as an that will give me that will save time. Okay, now let us start. The tax due is 16,300. Okay, 16,300. 16,300 into 15%. Okay, but I should have at least paid 16,300 into 12%. Remember, I should have paid I should have paid 16,300 into 15%. I should have at least paid. Okay, actual paid is 3 lakhs. Actual paid is 3 lakhs. Okay, no interest, there is no shortfall. There is no interest, no shortfall, my dear friends. Why? Look at the provision. Look at the interest paid. Advance tax installment 3 lakhs per installment. So I have paid that. I have paid that. In June, I should have paid 242 or at least 193. I have actually paid 3 lakhs. Okay, there is no shortfall, so no interest. There is no shortfall, my dear friends. There is no shortfall, so there is no interest. There is no shortfall, so there is no interest. In 15th September, I should have paid 16,300 into 45%. 16, oh sorry. Okay, 16,300 into 45%. Okay, that is 7,27,335 I should have. But we all know I have paid only 6 lakhs. But one condition you need to check is whether I have paid 16,300 into at least 36%, 581. Actual paid is 6 lakhs. So again there is no shortfall, there is no interest. Again there is no shortfall, okay. Why I am saying no shortfall, as at least even though shortfall is there, but interest will not arise, as 36% is paid. Okay. So remember, in this case, first 2 installments we are not having any interest. First installment I have paid. Second installment, even though there is a shortfall of 127, but I have paid at least 36%, no problem. Sorry, 3,12,000. Are we clear? Okay. This is how this needs to be computed. Rarest question, but I have seen questions in this. Okay. If at all there is a question, you should be able to do without any difficulty. Okay. This apart, there are some interests which you need to know. First is interest under 234D. That is very interesting section. You know A, B, C, E, F. What is this D? I wrongly gave a refund. I wrongly gave a refund. where refund is offered as per prima facie processing, but later in assessment it is identified that the refund offered is in excess of what is given, what is needs to be given, then AO shall raise the demand. Assessee is liable to pay 0.5% for every month part thereof on the excess money refunded from the month of refund till the month of assessment order. Why, sir, till the month of assessment order? Because after that some other interest will come. 1% will come, not 0.5%. Excess refund granted by me, I am liable to pay interest. Demand, that 201, etc. Where assessment is completed, 156 order of demand is served, the tax demanded should be paid within 30 days. Where it is not paid within 34 days, 234 interest of 1% for every month or part thereof becomes payable. That's why I say, where assessee has gone on an appeal, the demand might be stayed. If in the appeal process where demand amount is reduced, then the same order will be applicable. Where demand is increased, then appellate authority will raise a demand for that increased quantum. Unless demanded, they will not pay. Refund is applicable if the assessee who has paid a tax or on whose behalf tax exceeds the amount payable. Every refund should be claimed. That is why 139 makes it mandatory to file your return if there is refund. Where refund is a result of appellate order, then assessee need not make a claim. AO is bound to provide the refund. Assessee is eligible for 0.5%, okay, from the first day of April, where the refund is due to advance tax, TDS or TCS. 0.5% where the refund is due to self-assessment tax, etc. Where refund is due to appellate order, interest will be computed from the date of payment of tax to the greater date of 0.5%. Just have one reading of these things, okay. Legal representatives. Any proceeding against the deceased shall be deemed to have been against the legal representative and may be continued. Just because somebody is dead, if he thinks he is out of any problem, no, he is putting his wife or son into problem. Any proceedings which could have been taken against the deceased can also be taken against the legal representative. The provisions of the law will be automatically applicable. Only one relief: the demand cannot exceed the estate inherited. Otherwise, I always tell people who are committing suicide should know this provision, that if they think that they are escaping, they are putting somebody else in a very big mess. Representative assessee. Persons assessed on behalf of another person. When this can happen, non-resident agent, minor or a guardian, trustees, liquidators. They have the same responsibility as if income is there in their hand. Right to recovery, that is the right to recover tax, is under the same measure. Demand I have already studied in 156, I am not repeating that. Okay. So, this is the fullest coverage we have on the advanced tax TDS chapter. Okay. For the reasons of my headache, I stop here. Okay. We will continue 7 o'clock today, 7 p.m. today. By 9:30 we should be over. I will give you the end instructions, whatever you want, by 9:30.